to tie-ups. Let's talk now to Alex Tarrant, who's M&A reporter for Dealreporter. Alex, the Pfizer-Astrazeneca deal would have been huge. How have the markets reacted to all this news?
Well, they had a day to sort of look at it over Easter Monday. It was quite good that it came out in the Sunday papers. Astrazeneca wasn't really trading its main shares on Monday. And so there's been mostly positive reaction. If you look at the share price of AstraZeneca was up 7% today, I think closed up about 5%. Pfizer, that was up as well a little bit. So good reaction in terms of the share price. That's just on M&A talk, though. Everyone likes good M&A story. You know, even though talks have apparently ended, the shares are up. In terms of reaction, there's been a lot of positive reaction, but also from the buy side, in terms of Pfizer shareholders, there has been some negative reaction there, questioning their CEO's strategy. But, you know, it was all green today.
Yeah, what's the rationale for Pfizer? I mean, you've seen shareholders questioning that strategy, but what's Pfizer saying about it?
Yeah, well, because the Pfizer CEO had been indicating that he was moving to sort of break up the company over the next 3 years, maybe. And so some shareholders were looking at that the sum of the parts valuation would be more of Pfizer as a whole. Here, though, you have a tax inversion angle. If the deal is structured properly, they could benefit from the UK's lower tax rates. Great buying a company in a tax haven. They could benefit from the UK's lower tax rate compared to the US tax rate. Deal synergies, there's been talk about 10 to 15% there. So headline numbers, looks like it would work out well. They'd get synergies, there'd be cost cutting. Pfizer may also be interested in AstraZeneca's cancer drug pipeline. So this pipeline that AstraZeneca's been building up recently, and it's garnered a bit of interest. So Pfizer may be looking at that, but some people have said, you know, if they're placing the deal on that, then it's effectively a leap of faith that it's all going to work.
Let's talk about Botox, because the makers of Botox have received an approach, haven't they, from the Canadian firm Valeant. What's in this deal for each party?
Well, Allergan have always been a rumoured target, right? So it's sort of no surprise that they're a target now. It's surprising, though, how this has sort of come about. Bill Ackman took a stake in the company. Usually when a US activist gets involved, they push for a breakup of the company, management changes, cost cutting. So Ackman's now teamed up with Valeant to look at this purchase, and that's turned a few heads and interested a few people. And that seems to be being taken well as well.
Let's talk about the pharma industry as a whole. So much M&A talk. M&A is your bread and butter.
Yep.
What's going on here? Why is there so much talk and so much of this going on right now, consolidation within the industry?
Well, in the pharma sector, the larger companies have been looking to reshape their portfolios, shed off unprofitable assets as a way of looking at growth. But in between that, we've still seen sort of big deals, especially recently. We had Forest and Activist come out a couple of months ago. So we're still seeing the big deals in the sector. In terms of the general sentiment, M&A sentiment's picking up, activity's picking up, debt's still low. People might have an eye on interest rate rises in the medium term, and so they might just think, why not now? You know, there are a good selection of assets, but there's a limited pool of these assets, and so people maybe, you know, the sun is shining, so why not move now?
I know, that's good. That's a good analogy. Thank you very much, Alex Tarrant. Thank you.